Hi guys, welcome to White Edge Markets. On the charts before us, we have gold chart on 15 minutes time frame. Want to review what happened in the market in the previous week. That is NFP week, the first week of March. After then, we'll likely preview the upcoming week, the second week of March 2026. So before us is in minutes time charts, as I stated earlier. This is how the markets opened previous week. On Sunday, we witnessed expansion higher up till have some retracement into this inefficiency in form of fair value gap, then expanded higher on a Monday morning, creating a London high. Then after that, prior to New York opening, we have that is 8:30. We have what we call relative equal high here on Monday. This on its own nullifies my trading model, my narrative to go lower, because I can't engage in price when we have relative equal high. I can't short, like price drop down into this discount. That was during New York section on Monday. Then coming into Tuesday, we saw expansion lower into deep discounts, into this deep discount PDRA of taking out all this internal range liquidity resting here, this short-term low, this, and then this intermediary term low here, leaving this equal high above here. So after that, Tuesday, we saw a kind of retracement. Wednesday, we saw kind of ugly price actions. And on Wednesday, all it did was able to take out the London low on Wednesday, then trade back into the zone. So this is a kind of seek and destroy day. Then coming into Thursday, we saw a little kind of expansion down into the discounts, but then coming into Friday, which is NFP, we saw how ugly price was on NFP. Let me zoom this out. So how ugly price was on NFP. So what can be your bias? Previous day low, that was Thursday low, was not taken. Okay, this for all that happened on Friday, the non-farm payroll. So this tips it down to us that this previous week was more of what accumulation week for the month. And then on the bigger picture, we see how it's looking. Okay, so this is the external range liquidity, this is external range liquidity. So we are inside this range, this low and then this high. We're inside this range. And look at how market traded after Tuesday. So just inside within this range, this high here and then this low. Okay, is a kind of range bound market on the previous week. 5 minutes, I don't think that is necessary. We don't do that here. Every week is not a setup, especially when it is NFP week. So, but that was nullified on Monday when this high was created. All right, I can't go low seeing this relative equal high, which is where liquidity is resting. Not reaching for liquidities in form of buy side liquidity, sell side liquidity, previous day high, previous day low, and relative equal high, relative equal low. Then it's reaching for what? Inefficiencies. All right, so it's reaching for going into the second week of March 2026. Wanna see how we can be participants in price action coming into this second week of March 2026. All right, so before us is a chart of weekly chart on gold. We all know that gold has been bullish. It has been expanding higher. We have been seeing higher prices, and this is one of the characteristics of prices that have been in all-time high or in all-time low. Okay, this chart pattern we see here, we saw last week, was one of the characteristics. All right. Now, what does this weekly candle entails? Where does the body of this previous week candle close? The body closed inside the range of the previous weekly candle. Okay, the body of this candle is here, then it closed here. All right. So look at the chart closely. Ask yourself, do we still look bullish, or have we started anticipating lower prices? To me, we are still bullish. Just pause the video and ask yourself that question without opinion. So to me, we are still bullish, in the sense that this is expected liquidity. Okay, there is no inefficiency except this huge wick. Okay, this candle wick. And if I should introduce my Fibonacci level, it has been developed, once traded into the 50% of this candle wick here. Okay, look at the narrative. The bodies of the candle closed below the 50%, the lower quadrant. So, because we all know that once the body of the candle is closing at the lower quadrant, is an indication that we're expecting lower prices. But then liquidity has not been taken out. There is no kind of liquidity resting here. There are some that is resting here actually, but it's not evident. All right, this kind of previous week candle traded into took out this previous week low, which is permissible. Okay, traded into what, the upper quadrant of this previous week candle. I believe everyone can see this chart clearly. Traded into this upper quadrant, 0.75. all right, so it failed to come into the midpoint of this week. All right, so this is an indication. This is an indication that we are still expanding higher. Previous week low, then come into this week. All right, come into this week and then do what? Reject above the upper quadrant, and then we close for the week. So my opinion, my bias, my narrative into the coming week is that we are anticipating price to expand into this previous week high. All right, and then this. So I still remain bullish on gold. Going into the new week, took out this short-term low, and then we expanded higher into this, and then took out some short-term low here, then expanded higher, created a fair value gap in here, and then created a kind of short-term high. To me, this is a short-term high here, because there is no significant high here yet. All right, so if this becomes an intermediary term high, if and only if we trade into this inversion fair value gap and got rejected. Okay, that is my standpoint for the week. How do we trade into this inversion fair value gap? What is the reaction of this inversion fair value gap? Do we trade into it? Do we close above it? If this candle expand on Monday or Tuesday, closed above this, then reject. Okay, I'm engaging using this inversion fair value gap to attack this price side resting here, and then higher prices on gold. So our bias still remains bullish on daily. After we took out short-term low here, and then rejected off this fair value gap, of this inefficiency. Now look closely on how we rejected of this imbalance. Okay, so one part, and then we saw how price came into it, rebalanced it, and redelivered it. All right, so see this message, see the story. The much percentage of the body of these candles are closing above the inefficiency. Okay, so but the wick is doing the damage. So the wick is trying to rebalance and redeliver this area. Okay, so we assume that it has been rebalanced and redelivered. So we anticipate higher prices back into this premium PDRA. Okay, so our time frame. So we see how the previous month traded on the 4-hour time frame. So February closed, and then we opened on hourly. We saw this. So that's how we traded last week. So going into this new week, want to see all this range, outside of this range, this high and then this low. Remember, there's a key liquidity resting here in form of equal highs, and then there's a key liquidity resting below price in form of what relative equal lows. Okay, and then these levels shows you that we're in consolidation phase. But until I talk to you next time, be safe and good luck in your trading.